are this week, outpacing the broader markets this year in general. And coming up, I'll be speaking with CEO Vimal Kapur. This is a first on CNBC interview, and we have a lot we're going to cover today. You do not want to miss that. But let's get to this morning's top story as the world awaits President Trump's arrival in China later this morning for a high-stakes face-to-face with Xi Jinping. This as Trump adds one more high-profile CEO to the A-list delegation that's already en route. Complete coverage live from Beijing with our own Eamon Javers and Eunice Yoon. Eamon, let's kick this off with you first.
Yeah, good morning to you, Morgan. We are expecting the president here in Beijing in about 2 hours and 45 minutes time. He is in the air. We saw the departure yesterday from Washington, and then in Alaska, the president added a surprise extra visitor to the Air Force One delegation, picking up Jensen Huang of NVIDIA. There had been some question about whether Huang was going to be on this trip or not. He was not on an initial list of guests, but he made the appearance at the tarmac, picked up a ride on Air Force One, and we do expect him to be landing here along with a number of other CEOs. We're told Elon Musk is on the aircraft as well, and other CEOs will be using their own airplanes, not Air Force One, to arrive here. A whole list of high-powered American CEOs coming here to Beijing. And this, Morgan, very much is going to be a story of change, right? This is a change from the last meeting of these two leaders in Busan, South Korea, where this was expected to be mostly about trade. Now we have the Iran war that's happened since then, and this is very much going to be about trying to come up with some way to have a path forward in Iran as well as trade, so trying to solve two wars at once. And think about all the change that's happened since the last time these two leaders met in Beijing back in 2017 in the president's first term in office. We've had COVID since then. We've had the trade war since then. We've had the Iran war since then. A lot of tension in this relationship has developed since the last sort of grand welcoming that Beijing gave for President Trump in his first term. That was deemed a state visit plus because of all of the hoopla surrounding that visit. This one is expected to be somewhat scaled down, and we'll watch to see all the protocol over the next 24 hours or so to see who greets the president, how much of a red carpet, how much of a welcome is extended to the president, given that amount of tension that we've seen in this relationship. So a lot at stake here over the next 24 hours, Morgan.
Yeah.
Back over to you.
We'll say right there, Eamon, it's kind of incredible to realize that it's been almost a decade since these two leaders last met. Let's send it over to Eunice Yoon. Eunice, U.S. and China delegations have already been in meeting this week on trade ahead of the Trump-Xi sit-down. What is the China take and rhetoric and messaging that we're getting ahead of this?
Well, Morgan, as fixated as President Trump is on trade, President Xi is equally focused on Taiwan. The Chinese today reiterated their priority in this summit in a lengthy report in the People's Daily, the official paper. It reads, "The Taiwan issue is the most important and sensitive core issue in China-U.S. relations. Clearly defining the bottom line is precisely a responsible commitment to prevent serious risks." Now, in the run-up to this summit, there has been an expectation that Beijing was going to push Washington to change the language around the island, which Beijing claims as its own. The expectation is that they would ask for a shift from does not support Taiwan independence to opposes Taiwan independence. And today, the state media was much more direct about that. The Global Times said opposing Taiwan independence should rightfully be a shared responsibility by both China and the United States today, and indeed it must be a critical consensus that both sides strive to forge. President Xi had earlier this year also flagged that he was unhappy with the arms sales to Taiwan, saying that these arms sales to Taiwan must be handled with prudence. Now, we don't know what President Trump's intention is going to be, but so far, Morgan, sources and analysts have said that President Trump doesn't look as though he is willing to make those type of measures.
Eunice, stay right there. Eamon, I want to go back to you on this. I mean, with so many American CEOs and C-suite executives traveling with the president right now and Trump downplaying the likelihood of Iran being a focal point, what would be seen as success from the U.S. side? Is it going to be the announcement of more deals?
Yeah, Morgan, I think, honestly, if you talk to CEOs, and I talked to a lot of CEOs in the U.S. before we left for this trip, the expectation level here is very, very low. There's not a big expectation in corporate America that there's going to be some sort of trade breakthrough here. What they're hoping for, I think, if you talk to a lot of executives, is just a continuation of the sort of trade truce that was reached in Busan back in October. They're hoping for maybe some announcement of sales, Boeing aircraft, soybeans, that sort of thing, and maybe no big diplomatic faux pas between the two leaders or flashpoint of any kind. You heard Eunice talking about Taiwan, which of course is always a sensitive subject. So if they can avoid the sensitive stuff, get some products sold, and maybe have a continuation of the trade truce, I think a lot of CEOs would look at that as a win. But the expectations when you talk to CEOs are really on the floor for this. They don't see a major breakthrough because both sides have an incentive to continue to push for global market share.
Yeah, Eunice, I mean, you've seen a big push by the Trump administration to forge closer alliances, in large part through trade, energy deals, the like, even critical minerals, with some of our other allies in Asia Pacific, even Treasury Secretary Bessent in Japan as well. I mean, you have some flaring tensions between some of these countries, most notably Japan and China, too. How does that factor in here?
Well, I think it factors in that China is messaging that it really wants to see stability in this relationship. There are reasons why both sides would want that stability. But from the Chinese perspective, they want to see a closer relationship with the U.S. because it does benefit them in their longer run. They have their own political as well as economic agenda, especially when it comes to getting their technology and their
another, as well as Morgan. It's interesting that Scott Bessent was in South Korea today meeting with Vice Premier Liu He, who's the main trade negotiator for China. So potentially teeing up some more deals for the two presidents to announce over the next several days.
So what does this mean for the tech piece of the equation? As we have seen this decoupling, if you will, of those tech supply chains and tech stacks over the last couple of years, and it does seem to be a flashpoint in these geopolitical tensions.
Yeah, I mean, AI is viewed as this race between the two sides, which we'll see how that all plays out. Maybe some of that's a bit self-serving for some of the companies that are looking to raise money. At the same time, we've seen Chinese semiconductors companies really benefit from companies like NVIDIA being limited on what they can sell. That ultimately is potentially a headwind to U.S. companies' bottom line if they're somewhat restricted on China. Obviously, it's not just a large consumer base, but it really is the world's factory. And so that limits the ability of U.S. companies to reach clients, not just in China, but in broader Asia and really globally. So I think that's where President Trump's business background is really the key. We know he wants to announce deals, and I think that's why you're seeing so many CEOs on the plane with him.
Yeah, I mean, we spend so much time on CNBC, at least domestically, focused on the huge amounts of capital and CapEx spending and IPO pipeline around this AI revolution from a U.S. standpoint, but a similar thing is happening in China, too. So just break that down, especially as we do look to earnings from Alibaba and Tencent and other Chinese tech players.
Yeah, 100%. I think, in the short run, you're seeing really investors favor the AI picks and shovels. These are kind of the semiconductor plays, predominantly TSMC in Taiwan, SK Hynix, Samsung in South Korea. But we're seeing that in China as well. We're seeing the tech hardware, as well as some of the
attempt to get the king to say what he intends to do going forward. But whether he gets to enact that remains to be seen. Back to you.
Right. Steve Sedgwick, thank you. We got a lot more to come here on Morning Call, including a rally on the back of OpenAI, why SoftBank CEO has Sam Altman to thank for a massive Q4 profit. Plus, President Trump's plan to ease the pain at the pump. It's already running on fumes. We're live in Washington with those details. Right. Steve Sedgwick, thank you. We got a lot more to come here on Morning Call, including a rally on the back of OpenAI, why SoftBank CEO has Sam Altman to thank for a massive Q4 profit. Plus, President Trump's plan to ease the pain at the pump. It's already running on fumes. We're live in Washington with those details. And later, a first on CNBC with the CEO of Honeywell. We're talking China Summit, aerospace and defense, industrial and physical AI, and this big company reimagining. We have a very busy hour still ahead. You don't want to miss it. Morning Call will be right back. Welcome back to Morning Call. We got a market flash on Micron. Those shares are jumping almost 6% pre-market right now on the back of a big price target increase from Bank of America, going from $500 to $950 per share. B of A saying it expects memory demand will continue to outgrow supply, driven by AI. Micron is among the biggest gainers in both the S&P and NASDAQ pre-market and in general this year. Take a look at some of the other chip names, too. Everything, as you can see right there on your screen, is trading higher this morning. Well, SoftBank out with results this morning as well, showing massive gains for its Vision Fund as the rest of the Japanese telecom and tech giants' businesses struggle to keep pace. CNBC senior technology correspondent Arjun Kharpal has been covering all of this morning and brings us the latest. Hi, Arjun.
Good morning to you, Morgan. Look, the market was closely watching one thing. That was the performance of SoftBank's Vision Fund, which posted a $46 billion gain in the year ended March. Nearly all of that was driven by SoftBank's big bet in OpenAI, which the company said saw a gain of $45 billion. So far, SoftBank has invested more than $30 billion in OpenAI, first getting into that company in 2024, before adding a $30 billion commitment in March 2025 at a $260 billion valuation. The key here is that valuation has ballooned to over $800 billion, which is really supporting the Vision Fund here. SoftBank is eventually targeting a total investment in OpenAI of $60 billion, which would give it a 13% ownership stake. Founder Masayoshi Son has attempted really to position the Japanese giant at the center of this AI boom with investments across various AI and chip companies such as Arm. However, there is increasing investor concern at this point about the concentration of OpenAI in SoftBank's broader investment portfolio and the debt load it currently has as well. SoftBank CFO today really trying to assure investors by highlighting companies that are waiting in the wings to go public, such as TikTok owner ByteDance, and revealing SoftBank has $3.5 trillion yen in cash, enough to cover more than 2 years of bond redemption. Still, investors have rewarded that vision so far around AI from Masayoshi Son, with the stock up over 200% over the last year, Morgan.
Not too shabby. Arjun Kharpal, great to have you. Thank you. Well, straight ahead, support for a gas tax holiday is running on empty in Washington. We've got a live report from the Capitol on when or if it becomes a reality, at least from a federal level. But first, check out shares of Samsung. We're just doing a lot of Asia tech this morning, but that's because it's moving. It's recovering from a sharp decline early in today's session in South Korea that initially wiped out more than $60 billion in market cap. The drop coming after the company failed to reach a new wage deal with its workers' union, who've threatened in an 18-day strike, which could start as soon as next Thursday. So keep an eye there. We can see shares are up about 1.5% right now. Morning Call will be right back. To significantly increase the number of rocket launches per year. Keep in mind their sole shareholder at Blue Origin is Jeff Bezos, but in the midst of the SpaceX IPO, perhaps getting a lot of attention and a lot of outside investor interest. So one to continue to track here. Also, Anduril hitting a new $61 billion valuation in a $5 billion funding round led by Thrive and Andreessen Horowitz. Anduril CEO says the company will use the cash to invest, quote, aggressively in manufacturing capacity, research and development, and infrastructure. Well, let's turn to the latest figures from AAA, showing the price of regular gas is holding steady above $4.50 a gallon. This is slightly lower from a week ago, but still up more than $1.35 from a year ago. President Trump's plan to offer some relief at the pump getting lukewarm reception so far from lawmakers on Capitol Hill. Emily Wilkins joins us now with more. Emily.
Good morning, Morgan. Well, yeah, look, Trump's pitch to get rid of that federal gas tax, it's really getting that lukewarm reception on Capitol Hill. And it's partly because that if you revoke this tax, that could impact infrastructure. The gas tax, it funds things like highways, roads, bridges, and suspending it for 6 months is estimated to cost as much as $21 billion. That's according to an analysis by the Committee for a Responsible Federal Budget. Now, Trump would likely need to get Congress's approval to suspend the tax. That's, of course, about 18 cents per gallon. Senate Majority Leader John Thune said yesterday that he's open to Trump making his case for getting rid of this tax, but he wants to hear a plan to ensure that the savings would go to consumers, as well as make sure that infrastructure is still supported.
We've had some of our colleagues who've come out in support of, repealing, or at least temporarily repealing, the gas tax, but obviously that has implications for the Highway Trust Fund, and so those are things that you have to take into consideration as well.
Democrats are also cool to the idea. Senator Cory Booker told us that while rising gas prices are an issue, so are needed fixes for infrastructure.
It's really robbing Peter to pay Paul. Because remember, the gas tax comes out of our Transportation Trust Fund that has a big debt. It should be repairing our roads and bridges.
Several Republican senators, as well as Speaker Mike Johnson, told me and other reporters that to really get the price of gas down, the Strait of Hormuz just needs to be reopened. But we'll have to wait and see if the White House wants to prioritize pushing for a repeal of the gas tax. Otherwise, it likely doesn't have the momentum that it's going to need to move on Capitol Hill. Morgan?
All right. Emily Wilkins, thank you. Well, still on deck, the CEO of FedEx pushes back on Amazon's impending freight threat. Anthropic weighs a massive new funding round, and we've got details on what could be the biggest U.S. chip IPO in years. Plus, Wall Street rate shock and why yesterday's inflation print could mean higher for longer. Just ask Greenlight's David Einhorn. Morning Call continues next.
I think it's going to be hard for the Fed to lower interest rates while inflation is 4% or something very close to 4%. I do think that over time, Kevin Warsh is going to have more of a dovish view than Powell has had. And when he has the opportunity, if we get a peace outcome or we get lower oil prices and stuff like that, I think those kind of cuts will be yet to come.
I'm Morgan Brennan. Welcome back to Morning Call. Let's get a check on U.S. stock futures after a mixed session yesterday for stocks, with the Dow finishing in the green, but the S&P and NASDAQ both closing lower yesterday. You can see it's the reverse on your screen this morning, with Dow futures under some pressure and the S&P and NASDAQ both poised for a higher open. Well, Treasuries, let's get a look there ahead of today's next key inflation report, April PPI. You can see Treasury yields are a bit lower across the curve, but keep in mind, we've still seen this big run up in yields in the last couple trading sessions from where we were just late last week. So the U.S. 10-year Treasury yielding 4.463% right now, and the 30-year Treasury yielding more than 5% right now as well. CPI yesterday coming in its highest level in 3 years, so that has added to what we've seen in the bond market. We're also watching energy, which was a big contributor to CPI yesterday. The IEA warning this morning of further price spikes as global oil inventories fall at a record pace. You can see a bit of pressure on the screen right now for energy futures, but WTI crude still trading around $101 per barrel. Brent is trading around $107. Checking some of this morning's latest headlines as well. President Trump confirming NVIDIA CEO Jensen Huang on his trip to China after all. Air Force One picking up Huang during a stop overnight in Alaska, and Huang will join the likes of Elon Musk, Tim Cook, Larry Fink, Jane Fraser, Kelly Ortberg, and a number of others. Anthropic, meantime, is reportedly in early talks to raise at least $30 billion in new funding at a $900 billion valuation. It could be its largest round to date. Bloomberg reports the round is likely to close by the end of this month. Anthropic also continues to release all of these new products to the marketplace this week, focused on legal. After raising its price range twice, Cerebras Systems is telling prospective investors that it expects to price its IPO after the close today at the top of its expected range, which is between $150 and $160 per share. That was already raised. Reportedly 20 times oversubscribed, the AI chip maker could be looking at a valuation of $49 billion on $510 million in revenue. Those numbers would make it this year's largest offering and the biggest chip listing in the U.S. since ARM. Well, Sam Altman on the stand in Oakland, California, is, as of yesterday, rejecting Elon Musk's allegation that he betrayed OpenAI's founding mission to serve the public good and that it was Musk who wanted to seize control of OpenAI and make money from it. On claims he tried to, quote, steal a charity, Altman said, quote, "It feels difficult to even wrap my head around that framing." And FedEx CEO Raj Subramaniam downplaying the new threat from Amazon and its recent supply chain services announcement, telling Jim Cramer on Mad Money last night that what FedEx operates is, quote, completely different from Amazon.
The true network is something you can pick up in any one part of the world and get it to any other part of the world in a couple of days. And for that, you need a system like what we have here and the networks around the world. That's not what was announced at all.
Keep in mind, FedEx disentangled with its business with Amazon a number of years ago. It's gone back and done some new contracts in the last year or so, we'll call. But certainly a dynamic to watch. Well, guess what else we're watching? We're watching shares of Honeywell. Those are up nearly 13% this year, outpacing the broader markets. The company is just weeks away from the next stage of its multi-year restructuring plan to carve out the conglomerate into 3 publicly traded companies. Up next, we get the spin-off of the aerospace business, which is set to happen at the end of next month. For more, I'm joined in a first on CNBC interview by Vimal Kapur, Chairman and CEO of Honeywell. And it's great to have you here on set. Welcome.
Great to be there, Morgan, with your show.
There's so much to talk about. But first, let's start with updates as you do move to this aerospace spin next month.
So we announced this last year, February. And we talked about the separation will occur sometime in the second half of this year. And the good news is we are able to do the work of separating aerospace business in 5 or 6 weeks from now. So 29 June is the first day of Q3. And that's the day aerospace will become a separate standalone company, which will leave Honeywell to be a pure play automation. And the good news is that we have created 3 large independent companies through this process. The first spin of Advanced Materials, Solstice Advanced Materials, doing extremely well as a standalone company. I'm very confident aerospace and automation business are going to be leaders in their category, both for the customer and also in the market. So looking forward, exciting times ahead.
Yeah, you also announced deals to sell the warehouse and workflow solutions business, also the productivity solutions and services business as well. Looking ahead to this aerospace spin, do you feel like the remaining portfolio is right-sized, or are you going to be looking at it differently in terms of other types of acquisitions or growth opportunities?
So what we did, Morgan, was a bit unique, that while we did the spin, we also did major work on our portfolio transformation, because we wanted that when we come out of the spin, specifically automation business, the business is future ready. It is addressing the future needs like LNG demand. We made 2 acquisitions in that, or Word is spending more money on cybersecurity. And we did some divestitures, like you mentioned, on productivity solutions business and warehouse automation business. So essentially, on other side of the separation, in a couple of weeks from now, each business is positioned so well for the market it serves. Now, you're never perfect. It means, do we need to do more portfolio work? I think active portfolio management is a big part of opportunity. So we'll stay always active, look at what will happen in terms of opportunity, but do it very responsibly for our customers.
So what does industrial automation entail, especially in this age of emerging physical AI?
So automation is so central to our life, and it's something like oxygen. We breathe and we don't feel it. It's like all around us. Automation systems automate the segment we serve: buildings, offices, airports, refineries, pharmaceutical plants, semiconductor facilities. So it's a heart and center of everything. So it naturally is a high growth vector, a segment. The AI provides a totally unique opportunity because automation systems creates data. That data was used so far to automate a facility. That's what it was used for. And it was not used to learn how the equipment is performing, how the asset is performing, and make it even better. So where we are pivoting from is from automation to autonomy. It means we are learning from our performance of our own system and giving customer additional set of insight, what can do incrementally to run better asset performance, better operational excellence, make their people smarter. And that's a future opportunity for us, that not only we benefit from automation being a secular trend, adding physical AI onto it is more of an intelligence layer, which is going to make us give additional business opportunity. And that's why the spin or separation is such a perfect time. While on a standalone basis, we are a compelling company, the whole AI, its utilization is going to create additional opportunity for Honeywell and our customers.
Yeah, there's so much focus on disruption and displacement from AI to different parts of the market. I think about software, for example.
Right.
What does that actually mean when you're talking about factory floors? You're talking about energy transformation, physical AI.
In our case, the problem solving are unique for each sector. So when you think of use of AI in industrial sector, which we serve, the data is not in the public domain. You can't go to internet and train the data of a hospital that how to run it better, or a pharmaceutical facility or a refinery. The data is in our systems. So there's a friction of data we need to remove. It means we need to do something about it. And then you need to have a domain knowledge on what problem to solve, because problems change by each sector. Therefore, by default, it just makes our proposition very different than a generic AI use cases, where there's a fear that it's going to impact the business model of software. We are solving the customer problems which are known, and they were not able to solve it so far. So the knowledge capture, the learning systems is creating additional opportunity for them. Because think about it, if you're running a plant or operation, the people who are running it becomes very knowledgeable. When they walk off the door due to retirement or other opportunities, the knowledge goes away with them. So new people have to learn all over again. What the physical AI system do is that intelligence is kept within our system, so that the next set of cohort comes in, they're not learning all over again. And that is incremental opportunity it is creating for our customer. They not have to teach all over again. These are complex systems to run, complex assets to run. So knowledge and operational knowledge, maintenance knowledge is a lot. And it also gets complicated by shrinking population in the world. As the world gets smaller, even harder to get people who can do this kind of work. So I think it's coming right at the right inflection point, where we are able to create more opportunity for our customers.
All right. You're touching on a lot of stuff that I want to dig deeper into. First, we're going to take a break. So Vimal, stay right here.
All right.
Because we do have much more to talk about in Morning Call. We'll be right back. And reskilling workers too. I mean, you're already seeing this reemergence, at least here in the U.S. in the manufacturing data as well. I guess just more broadly, how are you thinking about both the U.S. economy from your, vantage point, and the global economy as we do see this AI revolution take root?
I think the AI in context of industrial world is a very good news, because it's going to compound the economic or value creation within the sector by more operational excellence in the operation, better asset uptime, making people more skilled. And the risk which our customers carry of not having skilled people to run the operation gets mostly mitigated by better capabilities, which we create on an intelligence layer on top of our system. So think about physical AI system more like Google Maps for our customer. When we are able to drive effectively with Google Maps, so intelligence layer on top of being a good driver. So you need to know how to run a machine or equipment or our automation system in different end markets. But the skill shortage issue or the skill deficiency get addressed by this intelligence layer. And it's coming very fast in terms of new capabilities which we are rolling for our customers. They are changing every month, literally every week. And that is going to be a great set of opportunity for what I say economic value creation for our customers.
We have President Trump en route to Beijing right now.
Yep.
Your expectations for this Trump-Xi summit and what could come out of it for American business?
I'm optimistic that last 1 year of more stable trade relationship is good for businesses. It allows us to operate with a lot more certainty. So I'm optimistic that on the trade side there's more good news, and it just allows us to progress our business, both in the U.S. and we also have reasonably strong business in China. So looking forward to what comes out of this very important summit.
Now, I realize you touched on this in earnings not that long ago, but impact from what we're seeing in the Middle East right now on Honeywell, and how does it, I guess, factor into this bigger conversation, this bigger dynamic around supply chain resilience?
So, we have, today's Honeywell of little over $40 billion high single-digit revenue come from Middle East. So clearly, when we are not able to ship our product or provide our services because some sites are closed, have a near-term transitionary impact on our revenue. We signaled that during our earnings call at this point. But on the other end of it, what I believe is that both our customers in Middle East and the customers which are receiving energy, partly in Asia, mostly in Asia from Middle Eastern countries, are looking for resiliency as a primary. What are my strategic options? So if I'm a customer in Middle East, they likely are investing more to make their infrastructure more robust. They're also looking at more ways to ship the products differently. So there's a conversation going on. But if on the receiving side of energy, countries in ASEAN or Japan, Korea, India, they're looking for alternative options to improve their resiliency. Can I store more product? Or what are my alternative options to look at alternative sources, US being one of them, right? They can buy more gas and more oil from there. Or they can look for alternative countries where they will look options for. So all being said, this is going to change the way energy markets operate. Good example is after Ukraine war, how Europe operates the energy sector has changed and evolved. So I think we have to wait and see how the Asian markets, which are primarily impacted, will evolve on the other end of the war. But I think it's a good news for, no war is a good news at the end of the day, because people who are in the middle of it, they are suffering. But from a business perspective, and I think longer term, and the things are settled, it's a positive news for our businesses like Honeywell, which participate big in the energy sector.
Okay, we have to leave the conversation there. We didn't even get to Quantum, which you and I talk about every time we sit down together. I know there was a filing, IPO filing, not really 3 businesses that you're creating here, but 4.
Absolutely.
So please come back so we can have that conversation as well.
Thank you very much for having me.
Thank you for being here. Vimal Kapur of Honeywell. All right, we'll be back after this break. Earnings from Alibaba. Earnings and revenue coming in below Wall Street expectations. The company's cloud intelligence group continued to accelerate, with AI-related product revenue posting triple-digit growth for the 11th straight quarter. But Baba says it will continue investing in AI and cloud infrastructure to strengthen its competitive position. You can see those shares are down about 1% right now. It's time for your call sheet, where we look at the topics driving the trading day ahead. Crew members today: Craig Johnson, Chief Market Technician at Piper Sandler; Ross Mayfield, Chief Investment Strategist at Baird; and Courtney Gelman, Washington Research Analyst at Strategas and Lead Portfolio Manager of the firm's Policy Opportunities portfolio. Okay, we got a lot to get through. Craig, I'm going to kick this off with you. Given what we just heard from Baba and the conversation we've been having around the AI and tech trade in general here in the U.S., how does this set us up for a Trump-Xi meeting?
Well, I think the Trump-Xi meeting is going to be probably not a massive event from my perspective, because I think the expectations are pretty subdued coming into this. I think there's going to be deals that are going to get done. I think Trump is going to be wanting to make a deal, whether it's on airplanes, whether it's on agricultural products. Those kind of things are going to be pointing toward. And I think as long as we don't see some sort of escalation in terms of tariffs, and as long as we don't hear any sort of saber rattling about Taiwan, I suspect this summit is going to go fairly smoothly, and markets will be just fine coming through this.
Okay. Courtney, your thoughts?
Yeah, so, something that's interesting to us, and we don't expect anything groundbreaking at this meeting. Both sides have an interest in maintaining the status quo. But when we've looked at the historical performance coming into and out of Trump-Xi meetings, it seems like there's a lot of exuberance going into the meetings. A lot is priced in. And then we see weakness coming out for both China-levered equities and the S&P 500 overall.
Ross, the other thing that the markets are watching this morning is inflation. We got a hotter than expected CPI print yesterday. PPI is on tap this morning, and you're seeing this play out. You've been seeing this play out in the bond market. Your thoughts?
Yeah, I mean, it's obviously, expected that the print was going to be hotter given what we know about oil and gas prices, but there's pressures even outside of the energy sector, in food, in airfare, in rents and housing. And so I think what it does is really complicate the picture for Kevin Warsh Fed, who wanted to come in and cut rates on the back of, an AI productivity argument. But we've already seen some more hawkish speakers on the FOMC. And I think you basically have to remove all rate cuts from the 26 and 27 outlook at this point, and really start to consider whether a hike is on the horizon. If that's the case, I think that's something to be on the lookout for.
Yeah, I mean, hot CPI reading yesterday, Courtney, fueling talk of the possibility of not just a Fed that's on hold, but maybe a rate hike when you couple that with some of the labor data we've been seeing recently as well. I mean, this is the Kalshi odds. Those are climbing in terms of the possibility of a rate hike here on the screen. Thoughts?
Yeah, I mean, our point of view is that first you have to see the Fed move off of its easing bias into a neutral bias before you can really see that hiking bias. So our base case is that we wouldn't be seeing hikes until Q4 at the absolute earliest of this year.
Got it. Craig, your thoughts on all of this, as well as this AI and tech trade. I'm going to bring it back full circle here. We got Cisco after the bell. And when we talk about inflation, yes, Iran war is having an impact, but you could argue, too, some of the pressure we're seeing on components that go into things like compute build out may also be playing a role.
Yeah, so bringing it back full circle, if we talk about inflation and other components of this, I got to tell you, just look at a chart of the CRB index. It's breaking out to multi-year highs. You're not seeing 10-year bond yields coming in. Just looking at price, looking at the charts, it does not seem like any sort of expectation for rate cuts are coming anytime soon. And it's fascinating how investors have gone back and forth between cuts, hikes, and at this point in time, that still remains really unclear. But putting this all back together, you know, one of the things that we've done here today for us is we've put out a report titled it "The Bull Market That Few Trust." There's no question that we're climbing the wall of worry with investors, whether it's Iran at this point in time or whether it's the surge we've seen in the technology sector. But one of the things we've been watching very carefully is the fact that the technology sector is now 41% of the investable assets here in the U.S. Semiconductors are 50% of that total technology sector. We haven't seen levels like this since Y2K in the year 2000. I think that's a risk that investors do need to monitor. And we do think that AI is going to be a very powerful tool going forward, but it's probably going to broaden out into other parts of the market. Honeywell, that we heard from earlier, industrial companies, financial companies, they're going to start to benefit. But the CapEx build out is just massive in technology. It is not likely sustainable.
Yeah, along those lines, Craig, quickly, you're Piper slashing tech exposure because of this?
Yeah, this is the second time this year we slashed our technology exposure. We're not comfortable. We don't think it's prudent to be sort of looking about other people's money and 50% of your money sitting in one sector. We've lowered it to 25%. That's the second time we've lowered it. We've had great returns. The portfolio is up over 20% year to date. But we think there's other opportunities in energy, industrials, financials, and we're just not willing to be that highly concentrated when you're seeing a lot of these technology stocks going straight vertical. Again, it's not sustainable. We've seen this before.
Okay, we're going to have to leave the conversation there. Thank you so much to our morning call crew. You got a mixed picture for U.S. stock futures this morning with so much on tap today, including that PPI report. Squawk Box starts now.